How many of you guys are sick of seeing ads of this boner killer on yahoo.com? This is James Altucher. This is a self-proclaimed crypto genius. I'm sure if you've ever were interested in cryptos, you've most likely ran across one of his annoying ads on Yahoo. I was so sick of seeing these ads, so I finally clicked on one and was lured to purchase a secret formula for only $49.99 that would show me the next Bitcoin. Now, I really feel bad for people who actually get lured into these ads and end up spending their hard-earned money on virtually nothing when all this guy is doing is pushing these sketchy-ass affiliate offers, sometimes for BitConnect or other crap out there. But that is besides the point. What I do want to do today is I want to go over with you guys whether or not Bitcoin will sustain its rally in 2018, or is it getting ready for a major crash and correction in 2018. Now, believe it or not, there are things you guys can pay attention to other than the price of Bitcoin to determine and give yourself an idea of whether or not a Bitcoin crash is approaching or it's has no chance of happening. So you guys already know that Bitcoin is a volatile product, but do you ever wonder why? Why is the supply and the demand driving it to such levels of volatility, and how does it actually compare to other derivatives out in the market? One thing that's really interesting about Bitcoin is the certainty of its supply and the constant roller coaster of its demand. We really have no idea of its demand. It has a unique characteristic unlike any other traditional derivative that you've seen out there. It can be bought, it can be sold, and it can also be mined. The mining rate of Bitcoin has been a very predictable figure, unlike other traditional assets like standard commodities and currencies. The quantity of available Bitcoins is a fixed number which will never exceed 21 million Bitcoins. Its inherent scarcity is a major driver to its rising price. This specific feature of Bitcoin having a fixed number of coins and a few other related cryptocurrencies makes its supply completely inelastic. Regardless of how high the price of Bitcoin goes, people who mine will never be able to produce more than that fixed amount of 21 million coins. Increases in the price of Bitcoin won't necessarily induce the miners to create more coins today at the expense of creating less in the future, since the total supply can't exceed 21 million. This this inelastic supply of Bitcoin is the major leading factor to its constant volatility. Derivatives that commonly have inelastic supply tend to be more price sensitive to shifts in demand than derivatives that have healthy levels of elasticity that have good supply. The same can also be said for demand. Inelastic demand leads to higher price changes in a response to small fluctuations in either supply or demand. Now, a derivative which can be closely compared to Bitcoin in terms of inelastic supply and demand is natural gas. If the price of natural gas shoots up today, consumers will still require gas to create electricity, heating, and to power industrial operations. So regardless of the volatile price moves, consumers will still be willing to pay for it in the short term. In the long terms, things can start to shift to a different demand curve. The demand's going to change in the long term. The same can be said for the supply of natural gas. Let's say that the price of natural gas doubles, which wouldn't really be very good. In the short term, producers will have trouble increasing the supply. Same can also be said for crude oil. What makes commodities like natural gas and crude oil different from Bitcoin is that their long-term supply has varying degrees of elasticity. In the short term, natural gas and crude oil prices may experience degrees of slight volatility, but over the long term, prices will converge towards this healthy equilibrium. So let's suppose that the price of natural gas and oil price experience consistent price increases. If this were the case, producers have the ability and will find ways, sometimes alternative ways and new ways, to produce more, which has historically been proven. The same can't be said for Bitcoin. What rising Bitcoin prices can do is increase the probability of forks happening. Now, if you're new to this, you're probably thinking to yourself, what the fuck are forks? Forks are changes, additions, or improvements to the software of cryptocurrencies, or in the specific case, Bitcoin, which creates an additional or improved version of it. Now, they can be temporary, lasting a few days, a few weeks, a few months, or they can be permanent, and they will end up getting added to the blockchain permanently. An example of this is Bitcoin Cash spinning out of Bitcoin. So you can make the argument that the supply of Bitcoin is actually increasing.
How, Sway? Take a few steps back to go.
You ain't got the answers, man.
Hope I didn't lose you guys there. I know it can kind of get a little boring, but the supply of Bitcoin is actually, people make the argument that the supply of Bitcoin is actually increasing through the creation of a similar or improved cryptocurrency. This fixed and elastic supply of Bitcoin is a major factor that drives its rising price. Now let's take a look at this chart that will show you the price of Bitcoin since its inception. Now in this chart you guys can see since Bitcoin's inception in virtually 2008 and 2009, the price of Bitcoin started off really slow, took off for a minute, crashed, and then continued on this insane run. Almost similar to another famous crash that we have known, was Tulip Bulb Mania. In the early years of Bitcoin's release, the supply of Bitcoins grew at a rate of about 2.2 to 2.5 million coins per year. Since its birth, the supply of Bitcoins has continued to grow, but the rate at which the supply has grown has slowed down significantly. A major part of this is due to the mining and the growth of mining in recent years. Now, this leads us to our next discussion. How are Bitcoins actually created? Bitcoins are mined. So what the fuck does this even mean? The process of mining itself is extremely complicated. It involves computers solving complex cryptographic math problems at just absolute insane rates of speed. So why have all these computers solve all these math problems? When there's a large amount of money to be made in the back, people will solve just about any problem. In exchange for solving these complex math problems, miners get rewarded with Bitcoins and also transaction costs for those Bitcoins. The difficulty of solving these math problems has grown exponentially over the years, which in turn requires additional computational power to solve these problems. This has not only driven up the price of Bitcoin higher, but also the physical equipment that's required to actually mine them. Now we're going to take a look at a chart that shows the rising difficulty level of mining since its inception. The graph represents a relative measure of how difficult it is to find a new block and complete the new block. The difficulty level is adjusted periodically as a function of how much hashing power has been deployed by the actual network of miners. It's kind of boring. So as you can see, it should be no question that as the difficulty increases of the mining, so does the cost per transaction. Next is a chart showing the mining revenue divided by the number of transactions since Bitcoin's inception. So you can make the comparison that Bitcoin behaves much like energy, metals, and derivatives. The difficulty of finding, extracting, refining commodities from our planet has increased exponentially over time. This will drive the price up over time, and once it becomes so high, innovation is necessary in order to bring the cost lower to a level where consumers have the purchasing power to use them. Take the rising cost of oil, for example. Back in 2001, the cost of 1 barrel of oil was approximately $23. Today it's nearly double that at approximately $42.74. In 2008, oil hit a high of over $91 per barrel. After that, it slowly declined, and as alternative solutions such as electric cars began to get introduced. So the $1 million question becomes, what will happen to the price of Bitcoin this year and the next following months? Now, if you've been paying attention to what's currently been going on, Bitcoin did experience a little bit of a crash. It pulled back around 40 to 50% this past week, but then it slowly started to rebound back up. So in order for you guys to gain a better understanding of the price behavior of Bitcoin, you really need to pay attention to a few things. For one, you need to pay attention to the rising rate of its transaction costs and watch when those costs start getting in this congested area to where prices slowly consolidating and getting ready to head into a different direction. Also, pay attention to the mining difficulty. That is also very highly correlated to the price of Bitcoin. As the difficulty rises, so do the transaction costs. Pay attention to those, and then you will get a better idea of how and when the price of Bitcoin may experience a strong move either to the upside or to the downside. Now, a good resource that I use is blockchain.info. Here you can find a lot of stats related directly to Bitcoin. So we're going to take a look at a chart here. We're going to go to mining information. We're going to go to cost per transaction. Now you guys can see that the cost per transaction is in this consolidation stage. It's very congested right now. So if this continues to stay in this area and then breaks out and goes to the upside, the price of Bitcoin will follow. They're just so highly correlated. The same goes for the mining difficulty. So this is a very important factor to pay attention to when trying to predict where the price of Bitcoin may go. So this is from February 17th to today. So you can see how high the costs have gone, and the price of Bitcoin has followed. So once you start to see the transaction costs of Bitcoin declining, you can kind of speculate that the price of Bitcoin itself is going to decline. Now, pay attention to this in the next coming weeks because it is getting at a critical level. As you saw this week, Bitcoin and all their major cryptos experienced a crash. So pay attention to this going forward, and you guys will see how closely correlated the price of Bitcoin, its mining difficulty, and the transaction costs are. These are the three most important dynamic factors that you need to pay attention to in order to get a better understanding of the overall price behavior. Don't just take some idiot's opinion that Bitcoin is going to crash. Why is it going to crash? Are there more supporting factors to give value to those claims? So from now on, you guys should really start checking out blockchain.info. Great information. Thank you guys so much for taking the time to listen to me babble up all about this stuff. If you liked the video, please smash that subscribe button. This is KV Crypto Savages. Hit that subscribe button, and I'll see you guys next time. Cheers.